Misha wanted us to look at Sirius, ticker SRE. We can clearly see that the support around 15 Rand and 1 cent was protected this week, and that is seen as positive. It is a candle, possible dragonfly candle. Remember, with a dragonfly candle, the confirmation will only be in the next candle. But the big test is to see what has the share done in the past. Now we can see previously when it reached 15 Rand and 1 cent, the share found enough buyers to lift it again back to around 18 Rand and 2 cents. So technically below 15 Rand and 1 cent, the graph will be a concern. And if you want to nibble on it, you can use that as a stop loss. But the big test will be there around 18 Rand and 2 cents. Will the share find enough buyers to lift it above that resistance and then continue to a brand new record high? I think it's too late to buy the share, but 15 Rand and 1 cent will be my line in the sand. Below that level, I will be concerned about the share. If you want to give it a little bit of a bigger move, you can use that 40-week moving average. And that is waiting around 14 Rand and 29 cents. And remember, these are weekly graphs, so therefore you need to wait for a Friday close and then take the action on the Monday. 14.29 is your second line in the sand if you don't want to use 15 Rand and 1 cent. If you want to trade as an opportunity, possible target is that 18 Rand and 2 cent, 15.01 as a stop loss, and maybe it can bounce. We can maybe see that this continuation will be visible when 18.02 changes into a support. Because we've seen previously the share bounce, found resistance bounce, and if that upper band changes into a support, it can continue to high levels. However, if it doesn't and it finds resistance and it continues to decline, you will be sitting here with a double top formation. And again, that 15.01 level will be critical to protect, to make sure that the decline to the bottom doesn't continue. Reef wanted us to look at palladium, a share that has rallied massively to the top in surprise and then suddenly has found resistance there around $2,842. The big question is, will the momentum continue? Will the rally we've seen continue? Now, at the moment, if I look at these two candles, those candles imply a possible tweezer top. A tweezer top is two consecutive candles where resistance were found at almost the same level. The color of the candle is not that important. The fact that there were two consecutive sessions with resistance is seen as very important. So technically below this candle here, the tweezer top will be confirmed, and that is waiting there around $2,426. Below that level, the tweezer top on the palladium price will be confirmed. And that implies that we can see bigger profit taking. In other words, a further decline to the downside. The next strong support is waiting there around $2,262. And then even lower, 2,119. You can use Fibonacci levels or draw in some trend lines here. Some of them have massive gaps there. And then obviously that 40-week moving average at $1,823. Stop loss that you can use one if you want to consider a short is $2,836. We can see that even this week's candle is a spinning candle, which tells me indecision. They're not sure whether they want to take the price lower or higher, but those strong support levels can be used to identify possible stop loss level and short opportunities. And even if you want to buy it maybe and you believe that the palladium price will continue, you should be buying the dips then. So then maybe use these levels at around 2,423, etc. to buy the dips. However, it will be a risky trade. Why? My indicator, my stochastic indicator is in overbought territory. More importantly, there is a divergence. Lower highs are visible. My 2 moving average within my indicator has broken downwards. My shorter blue line has broken downwards through my orange line, and that is seen as negative. It tells me that there is a possibility and a probability that the momentum to the bottom can escalate. Kevin wanted us to look at the platinum price. So a lot of investors are looking to short it, and a lot of investors are looking to maybe use it as buy opportunities because they believe that the commodity rally will continue. However, Kevin, this bearish pennant has been confirmed. Now, a bearish pennant is a symmetrical triangle formation, and when this lower band changed into a resistance, it confirmed that a bearish pennant, and that is seen as negative. It tells me, it implies that the overall downtrend on the platinum price have taken a pause and it can continue even lower. If this level, and I'll give it to you now, does not change into a support again. So although the news around the platinum might be very positive, from a technical point of view, this bearish flag tells me I can maybe see lower levels. Now that critical level that needs to change into a support again is $932. If $932 changes into a support, the negativity will be wiped off the table and there will be a possibility that it can rise. However, my first big test is waiting around the 40-week moving average, and that is at $899. If that level does not change into a support on a Friday close, the negativity, the pessimism around the platinum price to the downside will continue. And we can see, if we go back, it is a commodity that traded above $1,450, etc., back in 2013. But this bearish pennant is negative, and it tells me that the overall momentum to the bottom can even decline. Strong support levels, $842, $780, and then that record low there around $765. Don't think that the rallies on the commodities will just continue on the platinum and palladium price. Use those levels to protect yourself and use those levels on a Friday close to make wise decisions. Keith wanted us to look at the top 40. We thought we'll spoil our viewers tonight and discuss the top 40 index. The volatility is definitely on the table, and to try to trade it is almost an impossible task, but there has been so many opportunities because there were movement, the indicators worked well, and it was really such an awesome time to make use of these opportunities. And we know that the 40-week moving average is the critical level. And we could see last week with the sell-off around global markets, when that 40-week moving average, which weighted at 50,417, changed into a resistance, it was just almost a free fall. It's found support there around 45,862 on the top 40 index. But what is a concern is that in this week's candle, and remember, it's in the making, it's not finished yet, this is a weekly graph. This week's candle went and tested this level there around 48,156. The question is it a good buy case? Did it test that level, could not find enough buyers, which meant it kissed it goodbye and the momentum to the bottom will continue? Nobody knows. But 48,156 is a critical level that needs to change into a support before I can be more comfortable about this top 40 index. Now, the other concern is that we are sitting here with a massive triple top formation. And there's two trend lines that I've drawn in here, but with that triple top, this horizontal line is the confirmation. It is the neckline of that triple top formation. And that at the moment has been confirmed. The question is, will it be confirmed by Friday? That is the critical level. Only when the index starts to consolidate above this 53,000 level again will I be comfortable to say, hey, we can maybe see new record highs on our top 40. But below 48,156, I am concerned. How low can it go? That is everybody's question. Now, obviously, this horizontal line is sitting on the level of the bear market, and that is at 44,153. And it's 20% below the stop here that was in the week of the 20th of November 2017, and that was at 55,192. 20% from that takes you to 44,153. So if this triple top plays out, it can take us back to this critical horizontal line. But also take note, if I zoom out here, this possible triple top now suddenly becomes a massive double top formation. So if 44,153 on the top 40 index does not get protected, and we can't find enough buyers to protect this market again like they did here around October 2018-19, then we've got a problem, because then we can see that window closed on 38,000 on the top 40 index. I want to give this time period, it was the period between October 2018 to December 2018. That's when we were all holding our breath to see whether this 44153 was kept as support, or were the sell-off so fierce that they took this index a lot lower. The question is this a good buy case? Only above 53,000 on the top 40 index will we assume that the momentum to the top continue. We're negative at the moment because of that 40-week moving average. That triple top can take us to 44153. That line in the sand for the bear market below 44153. That massive double top. And remember also, take note, this double top was formed from January 2017. So it's about a 3-year period that this market has built on this top, which means it can take 3 years to play it out. But we also know that when you throw a ball into the air, it comes down a lot faster than it took to get it. It only used a little bit of energy to get it up in the air, but a lot more when it starts to gain momentum and starts to decline. And we could see it. I mean, last week, not only in South Africa, but in world markets, that decline of about 11% wiped out weeks of risings. If you've got any questions, feel free to send us an email. Feel free to visit our website, fransdeklerk.com. Have a fantastic week. Take care.